There has never been a greater time than now to invest in the Metro Detroit area, and there is no other investment firm better qualified than Platinum Real Estate Holdings. With 40 years experience and over 1,000 homes sold, let Platinum Real Estate Holdings assist you with the purchase of a city-certified home of the highest quality, turnkey properties, screen renters, yielding instant cash flow. Well, what are you waiting for? Call or visit us online today. Welcome to the weekly recap for the week of April 25th. In today's recap, we're reporting on the 10 states and metro areas with the highest foreclosure rates, sharing 7 core principles of investing for successful wealth builders, and lastly, familiarizing you with 6 ways the so-called sharing economy can take your real estate business to new heights. This week's recap begins now. RealtyTrack analyzed nationwide foreclosure data for first quarter 2016. And before we tell you the 10 U.S. states and metro areas with the highest foreclosure rates, here's what the report revealed. First, more than 1/3 of the 216 U.S. local markets showed foreclosure activity to be below pre-recession levels. RealtyTrack also says to expect a growing number of markets to move below that milestone the rest of this year. And from the first quarter, these foreclosures are reported to be down 4% from the last quarter 2015 and down 8% from a year prior. This quarterly total represents more than a 9-year low and is the lowest quarterly total since 2006. Although this is good news for 1/3 of the markets, there are 10 states and metro areas with the highest foreclosure rates. Among the metro areas studied with populations of at least 200,000, the following ranked highest: Atlantic City, New Jersey, Trenton, New Jersey, Baltimore, Maryland, Lakeland, Florida, and Rockford, Illinois. Others include Las Vegas, Nevada, Tampa, Florida, North Carolina, Philadelphia, and Jacksonville, Florida. In segment 2, we're covering the 7 tenets of investing successful wealth builders know to be true, according to an article from the online education resource called Big Pockets. Let's get right to it. Principle number 1, investors never spend the principal. Investors understand this fundamental concept to the core. It is the root of capitalism and the great divide between the 1% and everyone else. The bottom line is, when you invest a dollar, you need to think of that dollar as gone. Tenet number 2 is investors must reinvest most of the investment returns. If you abide by this rule, you, your children, and your children's children will not only be wealthy, but exponentially richer until the end of time. Tenet number 3, to invest, you must have capital. And you cannot get capital without earning, inheriting it, and keeping it. It seems obvious, but this is why there's such a great divide in wealth in America. To call yourself an investor, you must put your own money in the deal. Bottom line, as long as you're bound to serve the interest of investors, you are a manager of the investment, not the investor. Tenet number 4, investment returns do not correlate with effort expended. You know that guy at the office who spends all day talking about his stock picks and portfolio? The guy who meticulously studies the market looking for undervalued stocks? That guy puts in a lot of effort. Unfortunately for him, he's wasting his time when it comes to long-term investing. According to Big Pockets, you could simply invest in an index fund and almost certainly earn better returns in the long term. Tenet number 6, investment returns are impacted by knowledge. The bottom line is, accumulated knowledge can be better than physical exertion. Tenet number 6, investors do not confuse volatility with risk. Here's a nugget for you. Stocks are not risky. Stocks are volatile, but not risky in the long term. In the short run, yes, you will suffer some big dips in the market. As investors, we define risk as the probability of having less wealth over time. With this correct definition, bonds are statistically more risky over the long run than stocks. Tenet number 7, the final tenet. The best investments are specific to the investor's personal situation. Here's a common sense tenet that can be overlooked. Most people, especially those with low net worth, fail to understand that great investment returns do not come from typical investments in the stock market, bond markets, or even in passive rental property investing. Instead, the greatest investment returns, financially speaking, have been from reducing your monthly personal expenses. Yes, reducing your monthly cash outflows counts as an increase in wealth. To all you investors out there, what would you add to this list? What single investing principle has suited you best? Let us know your thoughts. Now for the final segment, 6 ways the sharing economy can take your real estate business to new heights. Today, we're going to get into some sharing economy tips for the landlords and real estate investors out there. This is not a post about making money. It's about sharing economy platforms that can be incorporated into your business. This will include hiring contractors, inspectors, freelancers, real estate experts, and more. Let's get started. The first is called TaskRabbit. TaskRabbit is a great sharing economy platform for real estate investors. This is the most widely used tasking service and is available worldwide. You can hire for any handiwork that needs to be done on a property that isn't specialized, like electric and plumbing. You can hire painters, landscapers, woodworkers, cleanup crews, and much more. Number 2 is a service called We Go Look. For you investing out of state, or you just don't have time to check things out yourself, then We Go Look is your solution. Maybe you're buying land or a physical structure remotely and need someone trustworthy to complete an inspection. The We Go Look lookers will fill out comprehensive reports based on an inspection of the property and discussion with the seller. Number 3 is called Fiverr. Fiverr, it's a platform where $5 gigs are bought and sold. Although sometimes lacking in quality, Fiverr is a great place to start for bootstrapping real estate investors. There is so much Fiverr has to offer that is specific to real estate, such as designing a real estate logo, writing your real estate rental listing, or making a real estate marketing video, and the list goes on. Number 4 is a company called Upwork. Upwork is a website that is composed of a staggering 9 million freelancers. You can hire a virtual assistant who specializes in real estate, or you can pay to get expertise specific to real estate marketing, acquisition, advertisement writing, appraisal, and much more. Number 5 is Udemy and Big Pockets. Udemy is an on-demand educational video platform where experts record and sell video lesson packages. Some of the real estate-specific courses on this platform include real estate photography, real estate financial modeling, international real estate diversification, real estate auctions, Facebook for real estate, and much more. The last of these tools is called Dolly and Bellhops. This could be a great choice for moving, whether you're moving furniture, transferring stuff to storage, or transporting large items to a buyer. Dolly and Bellhops are 2 sharing economy platforms that can help. In conclusion, being a real estate investor or landlord is a full-time job by most accounts. The list of tools available to this group of entrepreneurs grows daily, and we have just touched on a few here. Please share with us any online tools that you feel have helped out. We can work together to make our lives easier. Well, that's this week's recap. Thanks for listening. Please comment on what you found helpful, and have a great day. This has been your weekly real estate investment news recap. Did you find this recap helpful? Please like or comment below this video to enter to win a free copy of our ebook, The Ultimate Real Estate Guide for Residential Real Estate Investments. You can also subscribe to our channel or go to our website to receive the latest in real estate news. Our website also affords you the opportunity to view our latest turnkey properties.